Welcome. In this video, is Xcn coin about to skyrocket? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most prominent structures on the chart is the clearly defined ascending trend line, which represents an upward momentum. This rising trend not only reflects the general direction of price movement, but also clearly illustrates how market psychology is shaping. In technical analysis, trend lines hold significant importance for investors because they not only summarize past price actions, but also offer clues about potential future movements. In the current scenario, the observed ascending trend line reveals that price action has been forming within this structure for a while. As the price moves upward, it has continued to form higher lows on each pullback, maintaining its respect for the trend line. This suggests that buying interest has not yet diminished, and that investors generally maintain an optimistic outlook. The price is currently approaching this trend line, which is considered a promising development in technical analysis. Trend lines often act as dynamic support levels. When the price nears this trend line, the likelihood of buyers stepping back in increases, potentially opening the door for an upward move. These types of ascending trends tend to perform more reliably during periods of positive market sentiment. That's because throughout an uptrend, the price consistently forms higher highs and higher lows. This is a technically strong bullish pattern that tends to encourage additional long positions. The price approaching this ascending trend line now signals a potential support area. Once contact is made, a bounce from this level is quite likely. Historically, this trend line has been tested multiple times, and in each case, buyers have managed to regain control and push the price higher. Such ascending trend lines provide investors with valuable direction, both in the short and medium term. These lines allow for a clearer view of the market's overall structure and direction. If the price touches the trend line and rebounds upward, it not only signals a continuation of the current uptrend, but also suggests that the trend is strengthening. These scenarios are known in technical analysis as in-trend corrections. After a brief pullback, the price resumes its movement in the direction of the trend, signaling a more sustained strength in the market. It's important to remember that trend lines are not merely linear constructs, but represent the collective subconscious of market participants. In other words, many investors observe the same trend lines and base their decisions on them. For this reason, such structures often become self-fulfilling prophecies. If everyone believes the price will find support at a trend line, buy orders accumulate at that level, and the price actually begins to rise. In the current scenario, the price approaching the ascending trend line suggests that strong demand may emerge, leading the price to gain upward momentum once again. There's a frequently used phrase in technical analysis: "The trend is your friend." This saying emphasizes that trading in the direction of the trend tends to yield higher success rates over the long term. Considering that the current trend is upward and the price is nearing this trend line, this presents a highly favorable picture for investors. These types of movements often mark the beginning of a new rally, especially if the price has previously bounced off this trend line and formed new highs. A similar outcome could occur again, with the price potentially moving upward once more, but we can't rely solely on trend lines to make decisions. Let's take a look at other metrics as well. Stay tuned. One of the most notable structures on the chart is the ascending channel formation, a pattern frequently encountered in technical analysis and considered highly significant by investors when determining market direction. These types of formations are extremely helpful in understanding both the short-term fluctuations and long-term trends of price movements. In the current setup, we can observe that the price has been moving clearly within an upward channel for a certain period. This ascending channel reveals that with each rise, the price forms higher highs, and with each pullback, it forms higher lows. This structure indicates that there is a prevailing sense of optimism among market participants and that the price is maintaining upward momentum. Looking at the general structure of the channel, the upper band acts as resistance, while the lower band serves as support. The midline often functions as a reference point where the price oscillates in search of balance. In the latest movement, the price approached this midline and experienced a slight pullback. This situation can be interpreted as a natural correction move frequently observed in technical analysis. The reaction from the midline allows the price to retreat to more favorable buying levels, enabling new buyers to step in. Currently, when examining the price's position, we observe a movement toward the lower band of the channel. At first glance, this may appear negative, but in reality, it contains many positive implications. Such declines are considered part of a healthy correction process within ascending channels. If the price reaches the lower band, this level can act as strong support and potentially trigger a new upward wave. In technical analysis, Such support levels are critically important for investors because zones that have been tested multiple times and held in the past often carry the potential to produce strong reactions in the future as well. Approaching the lower band also signals the opening of a new opportunity window. At this point, many investors and algorithmic systems may come into play by placing buy orders. This increases the likelihood of a swift recovery, with the price moving first toward the midline and then to the upper band. These kinds of harmonic oscillations within a channel are referred to in technical analysis as in-channel trend movements and are often regarded as strong signals. Therefore, if the price reaches the lower band and bounces upward due to renewed buying, it confirms the functionality of the ascending channel formation and indicates the continuation of a positive market structure. Ascending channel formations are not only visually significant, but also highly meaningful in terms of investor psychology. Each level within the channel represents areas where specific expectations form among market participants. When the price approaches the lower band, buyers tend to step in, while near the upper band, sellers emerge. This mechanism forms the foundation of how the formation operates. In the current scenario, as the price nears the lower band, strong buying demand may resurface. This demand could push the price back toward the midline, helping to keep the market's upward potential intact. Another possibility that arises as the price nears the lower band is the occurrence of a fake break. This scenario involves the price briefly dipping below the lower band before quickly reversing direction. Such moves typically result in the removal of weak hands from the market, followed by a stronger upward movement. If such a scenario plays out, it would once again highlight the strength of the channel structure and confirm the continued bullish potential of the market. The MACD indicator is a powerful momentum indicator that is most commonly used in technical analysis and is highly influential in traders' decision-making processes. Analyzing the current chart, it can be seen that the MACD line made a downward intersection with the signal line, which was followed by some retracement in the indicator values. At first glance, this may be perceived as negative. However, a more in-depth analysis suggests that this development may be the beginning of a healthy correction process that paves the way for the emergence of a new opportunity. This is because in technical analysis, not every downward move is necessarily bearish. On the contrary, in some cases, such pullbacks allow the market to re-energize ahead of a stronger upturn. The current movement of the MACD can be considered as a natural breathing process following the upside rally that took place some time ago. Although the downside crossover indicates that market participants have started to show some caution, the MACD line has not yet reached the oversold zone, which could signal a possible bottom formation. An analysis of previous chart movements shows that during periods when the MACD exhibited similar patterns, the indicator lines approached below the zero level, and new upside crossovers often occurred in these areas. This is why MACD crossovers are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.